All right, hope everybody's doing well. I wanted to talk about today, got questions about day trading the SPY and what things are looking like for the next couple of trading sessions as we move into the weekend. So we have 1 day left for this week, 1 day left of trading. I typically don't like to do a lot of trading on Friday, but if the market gives me an opportunity, I'll take the trade. So let's take a look at the SPY and determine our direction as of this very moment. So right now the markets are closed, obviously, but we want to get an idea of what we're going to be looking at for the next morning, the next trading session. So the overall, I always tell traders, even if you're a day trader, you want to take a look at the broad markets. You want to take a look at the overall markets, looking at a number of indices, a lot of different tech stocks, financials, healthcare stocks, because those are the big ones that drive the market. And you also want to do multiple time frame analysis. So here I am on a weekly chart. You may be thinking to yourself, why a weekly chart, Bruce? We're day traders. Why would you do a weekly chart? So you want to get a different perspective on the market, and you want to take a look at, is it a major move that we're making? Is it in a major wave? Kind of like the ocean, how the ocean, when you're watching the waves, they roll in, they roll out. As they're rolling out, there's also waves that are rolling in. Those are minor waves. And the same thing holds true with the marketplace. So the broad market right now, we can see that we've had a nice run. And this is all the way up until the beginning of 2022. And then when 2022 hit, most of 2022 was a downward market. And then this area down here is we're starting to consolidate towards the last part of 2022. And then we're starting to make a bounce. So we're starting to make a bounce here. But does that mean we're going to go bullish if we're day traders? We trade the market, whatever the market gives us. Keep that in mind. So what is the market giving us at this very moment? We take a look at here. And those of you that really understand the power of candlesticks and the power of exhaustive wicks, those are things you want to start paying attention to. If you don't know about candlesticks, you don't know anything about exhaustive wicks, you'll want to learn those, because those can give you signals before the market actually makes a move. We can see back here in the mid-August timeframe, as we have this nice little bounce to the upside, and then we get this exhaustive wick. And this is, again, keep in mind, this is a weekly chart. We're going to take a look at a shorter time period in just a minute. But we take a look at this, and it tells us that it signals that high probability says the market's going to pull back down. And here, sure enough, it did. So we take a look at the market again, goes in cycles. We pull to the upside, exhaustive wick, another move to the downside. Then we take a look at this movement here, the most recent movement. And now we have a doji, exhaustive wick there, and we have the most recent candlestick showing an exhaustive wick, showing us that the high probability says we're going to make a move to the downside and pull back down again. Doesn't mean the market's going to crash. It's just telling us the chances are, as we're reading it right now, says the market will pull back down. So let's take a look at a shorter time frame. Let me just jump to a 4-hour chart real quick. We take a look at a 4-hour chart, and we can see here that, now look at this. Those of you that understand MACDs, our MACD is showing, even when the market was still trying to make that move up here, consolidation to the upside, our MACD was heading down and is still heading down. So here we have consolidation really to the sideways market. But then let me move this out of the way. Then as we take a look at the range that it's been in. So I've marked the range. So let me zoom in here. I've marked that range that we've been in. And now, just recently, today, we broke below the lower side of that range. So again, think back to the weekly chart that we just showed you with the exhaustive wicks giving you a signal. And now we've broken this trend this range on a shorter time frame. You don't want to fight the trend. So this is telling us, it's giving us a signal that says the probability says the market has a higher probability of continuing to pull back down and trade to the downside. So these are things we want to take a look at. Let's look at the shorter time frame. Let's look at a 5-minute chart where when I'm day trading, I will use this as a way to get my signals. So here on the 5-minute chart, we take a look at this. We had a nice little move to the upside during the day, during the morning hours when the market opened up. Here it is, early morning, about 6:30, opening bell. Nice move to the upside. and you have these lines drawn, and I color code my lines to give me an indication whether they're shorter term or longer term areas of support and resistance. And these happen to be longer term. So I'm paying attention to this as it hits this area of resistance. And now we start to take a look at during the day, we're looking at that MACD roll into the downside. We're taking a look at our crossovers moving to the downside, telling us chances are we're going to get a move to the downside here. And now at the end of the day, we've broken that range. It did not hold that longer term support. So chances are we continue to get a move to the downside. Now, again, everything could change in the morning, but this is telling us and giving us insight into where the market stands right now. So the whole point of watching this video is to tell you, pay attention to a number of things, particularly multiple time frame analysis, taking a look at candlesticks, and understanding exhaustive wicks, how they can give you a signal, and also understanding your key pivot points. Hopefully you enjoyed this session. Always try to make it a little bit useful for y'all. And I'll catch you next time. Thanks.